This is your Wall Street wake-up call. Even though OPEC agreed to production cuts last month, the cartel still pumped a record amount of oil in September. Joining me now is Jasper Lawler, a market analyst with CMC Markets based in London. So Jasper, OPEC production rising by 160,000 barrels a day to 33.64 million barrels in September a day. When you look at that, it's hard to believe that this so-called OPEC deal will come to fruition at its next meeting at the end of November. Do you agree?
Good morning, Scott. Well, it just goes to show at the very least OPEC and the OPEC nations are trying to squeeze out as much production as they possibly can up until the official meeting. The consensus from these informal meetings does seem to be that they're shifting towards some sort of agreement to cut production from some nations, others to freeze. What the market's really been focusing on the most has been Russia's likely involvement in this. Obviously, the oil price jumped to a fresh high for the year, for a one-year high on the comments from Vladimir Putin, the Russian president, suggesting Russia probably will get involved. But quite how is a big question mark here. It seems to me that maybe Russia's maybe a bit more amenable to a freeze. And if that's the situation, quite how OPEC's going to pull off a cut is difficult to see. And I think we can tell from these production numbers that even if there was a freeze, I mean, what difference can that really make? Because there is that record output after all.
Well, we should also point out that the only real details we know about this OPEC deal is that production will likely be capped at 33 million barrels a day. And so that technically is a reduction from the 33.6 million a day produced in September. Like you mentioned, it's a reduction from an already elevated level. So I can't imagine that doing much for prices, right?
Well, precisely. I think the reason that the oil price got such a strong run in reaction to the OPEC news was that the expectation was for a freeze at these record levels, and actually it turns out there was a cut. That was a bit of a surprise, obviously, but still a marginally small cut. It's not the difference in the number of barrels produced per day per se. It's more about what this means in terms of future policy and how these countries are going to coordinate together to eventually bring down production in order to support prices. So I think it's more of an expectation about what can happen in the future. But I think they're all going to be aware that the more they cut production, the more supportive they're going to be of prices, the more other producing nations or private producers, US shale being the obvious one, is going to step in and replace that lost production. So I think that's probably why this run higher in oil prices only has so far to go. And I think a lot of people have $60 per barrel as a possible major resistance area, because fundamentally this shortage of supply from OPEC is probably going to be made up from supply elsewhere.
All right, now yesterday oil prices, at least West Texas Intermediate, reached its highest level in 15 months or so. Do you think that, now we're seeing oil prices lower, do you think that over the next 6 weeks until the OPEC meeting, it'll be this sort of seesaw? Rumors come out that there's going to be this detail in the deal, and then when we find out that maybe there won't be a production freeze, just sort of this, this pile of information that investors are just forced to grapple with?
Well, exactly. Even in just the last week, the number of varying reports on Russia's specific involvement in this and how it relates to the other OPEC nations is bewildering enough. And we're going to, as you mentioned, as we get closer to the main report, we're probably going to hear more from Iraq. Iraq appear to be one of the biggest parties within OPEC that are against the deal because they are trying to expand their output. So I think fundamentally, if this is going to happen, it's going to require Saudi Arabia to shoulder most of the cut, because the other OPEC nations can't really afford to do so, and Russia doesn't have the will to do so. As long as the market believes that, I think the prices can be supported. If it loses faith in that, then that's when we could see a sudden sharp drop.
All right, Jasper Lawler from CMC Markets, thanks for joining us.
Thank you.
I'm Scott Gam, and you're watching The Street.